Joining me now is Kenny Polcari, partner and chief market strategist at Slate Stone Wealth. Kenny, welcome to NYSE TV Live.
Pleasure to be here with you. How are you?
Well. So yesterday's PPI reading came in hotter than expected on both a monthly and an annual basis. What does this tell you as a leading indicator?
So listen, it was a little bit surprising to be sure because it was much harder than expected. I think everyone kind of expected it was going to be slightly harder, but this came in substantially higher. And I think that's what that tells you is that producers are actually up to this point eating those increased costs with tariffs, and they're not passing them along to the consumer because we saw the CPI earlier in the week muted, right? Wasn't really advancing and all that. I think what yesterday's report tells you is that the tariffs are, in fact, causing some inflation. At the moment, the producers are eating them, but how much longer are they going to eat them? I think they're going to wait and see how it settles out. But ultimately, maybe Jay Powell's right, is that it's going to seep through and start to rear up inflation again. So while I don't think it's a complete disaster, and I do think that the Fed's going to focus on the softening labor market for a September cut, I don't think they're talking about a 50 basis point cut anymore at all. I think that's completely off the table. I think 25 basis points is where we're going to be unless we continue to get kind of data that suggests that inflation is going to spin out of control. I don't think that's going to be the case, but let's see.
So, Kenny, the S&P is coming off another record close despite that inflation reading yesterday. What do you think is driving investor optimism?
So, look, I think there's a couple of things. I think there's part of the FOMO trade, right? That fear of missing out. People that maybe got nervous in April and hadn't gotten back in. Then you got a bunch of hedge funds and stuff that had gotten short the market and it went against them. And so then they become buyers and it fuels that move higher. Look, we're up 30% off the April low and nothing but a straight line. And so retail investors, when they see that it doesn't actually pull back and it keeps marching higher and higher, they feel like they're going to miss out, so they jump on as well. And that keeps pushing stocks to new highs. But if you really pull back the sheets a little bit, you look what's happening, there's a lot of churning going on under there, right? While the indexes might be suggesting new highs, it's driven by a very, very small list of names. There's a bunch of other names, basic materials, financial, healthcare, that are all kind of churning off their highs underneath the surface. And so I think that what that tells you is while the index is suggesting new highs, the market is starting to struggle a little bit here. And I think retail investors just need to be a little bit cautious as they're allocating money. Don't feel like you're going to miss out, that you got to chase these tech trades. You don't have to do that. Trust me, they will come back. There will be a retreat in some of these names. And I think actually, as we move into September, which tends to be a fairly volatile month, that's when we're going to see the broader market pull back.
Fed Chair Jerome Powell is speaking in Jackson Hole next week. What do you think investors are going to be listening to closely for?
I think they're going to listen to something that he says that's going to give them an inside look at what he's now thinking about policy, what he's now thinking about, the latest, what's happened at the Fed. We have Cleveland out. There's this Stevie Moran is a new guy that's in. He's a Trump loyalist. There's potentially 3 or 4 names being floated as replacements for the Fed chair. And I think they're going to be listening to either comments about that, comments about what Jay Powell thinks where the economy is and what that suggests about rates going forward. Look, I think right now the market's pricing in 84% chance that there's going to be a 25 basis point cut in September. And I think that that's right. I think they're going to listen to see if, in fact, that's what he really still thinks. Is he going to give some indication that potentially he's going to stay in the camp of doing nothing, which I don't think is going to happen, but they're going to listen strongly to see if that's what he hints at all.
And if rates are cut, what effect will this have on the market and on investors?
Listen, I think the market has already reacted in front of the rate cut. The market clearly expects it. We know the market expects it. The Fed funds market, the money markets clearly are leaning that way. So if we get a 25 basis point cut, it shouldn't like suddenly make everyone wake up and go, oh my God, look, the Fed cut rates. It's expecting the Fed to cut rates. So I think when the Fed cut rates when they cut rates in September, then they're going to be listening to what he says about the October and the December meeting. Is he going to continue? Is this a one and done? Are we going to get 75 basis points that the market thought, last week that's what was going to happen by the end of the year? Or is that now changed based on based on the economic data. So I think all that taken together is what's pretty concern investors, retail investors, which is why I say, have a plan and stick to it and don't allow your emotions to get in the way.
This afternoon, traders are going to be keeping an eye on President Trump meeting with Vladimir Putin in Alaska. As an investor, what headlines are you on the lookout for?
So, look, you want to see the geopolitical stuff always has the ability to create chaos in the markets, but it's always short-lived, right? Because geopolitics don't, in the long term, price stocks, but it does create some short-term volatility. So I think what people are going to be watching for is what exactly happens in the first 5 minutes of this meeting. Does Trump walk in and walk out? Because if he walks out immediately, there's no deal. And that only means that there's going to be, secondary sanctions, that it's going to get very difficult for Russia in the market. You might see oil move higher as a result. I think you'll see gold move higher as a result. You might see a little bit on more geopolitical anxiety. But if the meeting lasts more than 5 minutes, as Trump said, then the market might start to assume that, in fact, they're making some headway and that there's going to be, hopefully, an announcement to bring an end to this chaos that's happening on the other side of the world. Doesn't mean it's all going to get fixed today. What they really want is a ceasefire. The rest of that conversation about land grabs and what to do will be down the road, but they need to get that initial agreement. And it's all going to be very visible on how quickly he does or does not enter and then exit the room.
Kenny, in about 20 seconds, what else are you tracking?
What else am I tracking? Well, look, as a wealth advisor and a long-term investor, I'm kind of just tracking all of the latest economic data and the geopolitical data. I'm looking to add money to sectors that are underperforming. Look what's happening in healthcare today. That's the underperformer of the 11 S&P sectors. It's still negative on the year. Yet you got really great news in UNH today. You've got real big names that are buying into it. I think it's going to help the healthcare sector. I think there's opportunity in healthcare. I think there's opportunity in financials, opportunity in basic materials, away from the tech names, right? You should not be chasing the tech names.
Thank you, Kenny Polcari, partner and chief market strategist at Slate Stone Wealth.
You're very welcome. Thanks for having me.
Thanks.